Greetings, everybody. Welcome to Liberty Call. Today is Tuesday, December 13th, 2022. Hope everybody's having a fantastical day out there in the interwebs. It is a chilly day here in along the Front Range here in Colorado. We have a snowstorm coming through. Didn't get a whole lot of snow, unfortunately, or fortunately. It means I don't have to get out the snowplow. But east of I-25, they have gotten pummeled, and you can't get to Kansas right now. You can't get to Nebraska. It is a mess. So if you're driving along the I-25 corridor out there, if you happen to see this, be careful. It is a complete mess out there in the central west. It's kind of hard to say. The Mountain West, I guess, is what people say out here. So anyways, my hands are freezing. My office only has one radiator running along this back wall. And I got a door right here, which unfortunately, because I like to have the blinds open, doesn't keep the cold from coming through too well. So anyways, all right, if it's your first time watching, please give me some thumbs up, likes, shares, subscribes. I would greatly appreciate it. I'm sure there's folks out there who are wondering what the hell is going on in the financial world and the economy. So I try to break this down as simple as possible for people on a daily basis. If you like it, great. If you don't, hit the road. I don't care. All righty. Well, let's go ahead and jump into the numbers and see how it was a real back and forth day. And I'll bring up the chart to show you what it looked like in a minute. But the Dow Jones finished the day up 0.3%, closing at 34,108. S&P 500 was up 0.72, closed at 40,19. NASDAQ up 1.01%, closed at 11,256. Small caps are up 1 1/3. The VIX fell 9.68% today. It's at 2258. Canada was pretty much flat, up 0.02. Brazil down 1.55 and Mexico down 0.21. So that's everything here in the Americas. Headed over to Western Europe. Germany was up 1.34, UK up 0.76, France up 1.42, the Euro stocks up 1.66, Netherlands up 1.7, Spain up 0.83, Italy up 1.37, Switzerland up 0.93, and Portugal up 0.39. In Russia, they were pretty much flat for the day. The MOEX was up 0.06 and the RTSI was up 0.01. And the overnights in Asia, Japan was up 0.4, Australia up 0.31, New Zealand up 1.1. In the Chinese markets, the Shanghai was down 0.09. SESE component was down 0.66. China A50 was up 0.14. DJ Shanghai down 0.2. Hang Seng up 0.68, and the Taiwan weighted down 0.61. So kind of a mixed day in the Chinese markets, but most of the globe was in pretty good order, other than outside our domestic space here in the Americas. They were down a little bit, but certainly not too bad. So let me go ahead and bring up today's chart, and especially the Dow. It was just, started out the day up, 600 points, and then just a steady slide, and was in the red by about 90, down about 90, and then most of the afternoon was in the green. Did dip back below the water line here for a short bit in the 3 o'clock Eastern hour, but finished the day off up, like I said, about 115 points. So same thing with the S&P 500. It was up, about 2.5% or 100 points. Never got into red territory, but certainly not as high as it started out. And a little puzzling on why that occurred. I would imagine probably had something to do with the Fed meeting, which is going on today. And I think there's a lot of folks out there just hoping beyond hope, praying to the financial gods that, Jay Powell will, start lowering interest rates so that their stocks and, their growth stocks will just take off again like they have been the last 2 years. But I don't think they're going to go ahead and print another $6 trillion to inflate your securities and make them look a lot better than they actually are. So anyways, all right. Well, let's go ahead and review today's market recap. S&P 500 gives up some inflation-led gains as Fed kicks off its two-day meeting. The S&P 500 paired some gains Tuesday, but remained supported as investors cheered fresh data showing easing inflation pressures for the second straight month, just as the Federal Reserve kicked off its two-day meeting. The Labor Department said Tuesday its consumer price index rose 0.1% last month after edging up 0.3% in October. For the year, though, through November, the CPI increased 7.1%, marking the smallest increase since December of 2021. Yay! We're pointing out that the tallest midget in the room right now because that's about all we can really do. Kind of reminds me of back in 2008 and 9 when things were so dreadful. And I was pointing out to clients, it's like, hey, you're only down 20%, but the market's down 50. Hey, we're winning. Most people were pretty happy about that, but it still gets pretty depressing when you have that meeting over and over and over again. All right. The lower inflation print isn't likely to alter the Fed's monetary policy decision expected on Wednesday, though it will likely spark debate among members on how much further to increase rates until reaching a peak. Quote, overall, a smaller 50 basis point hike is expected for the Fed's meeting tomorrow, to be followed by another 50 basis over the next first quarter next year before the Fed feels comfortable to pause the current cycle and reassess, end quote, RBC said. Expectations that the Fed could pause sooner rather than later push Treasury yields sharply lower, sparking a Meta-led surge in big tech. Meta gained more than 4%, followed by a 2% climb in Alphabet and a more than 1% rise in both Apple and Microsoft. Energy added to the gains from a day earlier as oil prices were driven higher by ongoing supply constraints amid the closure of the Keystone Pipeline supplying Canadian heavy crude to the U.S. Gulf of Mexico. And also the dollar index has been fallen, so that certainly has been helping things around the world too. So as far as inflationary pressures. Let's see here. Halliburton Company rallied more than 7%, while APA Corporation and Schlumberger were up about 4% each. In healthcare, meanwhile, Moderna jumped 1% after the drug maker announced positive results from its experimental skin cancer treatment. Pfizer, meanwhile, was up more than 2% as Goldman Sachs upgraded its rating on the stock to buy from neutral on expectations. The firm's RSV, migraine, and sickle cell disease drugs will drive growth in 2023. The move higher in the broader market comes as some continue to warn of a downturn next year, which I personally truly believe is going to happen, driven by a deterioration in corporate earnings as margins come under pressure from weaker consumer amid the impact of higher interest rates. Quote, as earnings projections deteriorate and the lagged effect of the Fed's actions began to set in a more concrete way, I think markets will turn down, end quote. Philip Toews, CEO and portfolio manager at Toews Asset Management, told investing.com. So again, some good news that inflation appears to be slowing, but again, it's kind of like, if your house was engulfed in flames, now the flames are just down here. They're not up here, they're down here. So, we're taking these small victories where we can get them, but again, don't go around, jerking each other off because it's certainly not great right now. All right, a little more details on the inflation data. U.S. inflation subsiding as consumer prices rise moderately in boost to economy. U.S. consumer prices rose less than expected for a second straight month in November amid decreases in the cost of gasoline and healthcare, as well as used cars and trucks, leading to the smallest annual increase in inflation in nearly a year. Underlying consumer prices advanced by the least in 15 months. The report from the Labor Department on Tuesday also showed, clearing the way for the Federal Reserve to start scaling back the size of its interest rate hikes on Wednesday. Again, I guess these journalists think they can wish this into existence that, hey, if we can, if we just hope and pray and say it enough. And again, the media has been gaslighting us for the last 3 years with everything going on in the world. So it isn't really surprising that they continue to try and force this narrative that, hey, we need to slow the interest rates and, hey, why don't we just cut them back to zero? The economy was running great when we did that before. So, all right. While Americans still face higher costs for rental housing, economists expected a moderation next year. The report was published as officials at the U.S. Central Bank gathers for their final two-day policy meeting of the year. The consumer price index increased 0.1% last month after advancing 0.4% in October. Economists polled by Reuters had forecast the CPI would increase 0.3%. Gasoline prices dropped 2%. The cost of natural gas fell, as did prices for electricity, Food prices climbed to 0.5%, the smallest since December of 2021, after rising 0.6% in October. I don't know about your natural gas prices, but we got our first big bill for gas. I guess our first really cold month was November, and it was expensive. We actually, with our new furnace that we had put in last, I guess it was April, we use less gas, but the prices per unit have gone up, so that isn't really helping things in the long run. In the 12 months through November, the CPI climbed 7.1%. That was the smallest advance since December 2021, followed by a 7.7% rise in October. The annual CPI peaked at 9.1% in June, which was the biggest increase since November of 81. Inflation remains above the Fed's 2% target. All right, so there's a lot more stuff here. If you want to read through that at your own leisure, feel free to do so. All right. Well, as we're getting in some good inflation or better inflation numbers, got oil going back up. Oil rises over $80 a barrel as dollar slumps on slowing inflation. All right. Oil settled over $80 a barrel on Tuesday and recorded its biggest daily gains in over a month as investors bought up risk assets after U.S. data pointed to slowing inflation. The market was also buoyed by concerns about supply disruptions, including ongoing shutdown of the Canada to the United States Keystone crude pipeline following a massive leak last week. I believe that was in Kansas, if I remember reading that in the news. Excuse me. Brent crude futures settled at $80.68 a barrel, up $2.69 or 3.5%. U.S. WTI crude futures settled at $75.39 a barrel, up $2.22 or up 3%. Both contracts recorded their biggest daily gains since November 4th. The dollar index plunged on Tuesday after data showed that the underlying U.S. consumer price inflation rose less than expected last month, reinforcing expectations that the Federal Reserve will slow the pace of its interest rate increases on Wednesday. A weaker dollar makes oil cheaper for holders of other currencies, which can boost demand. Quote, nobody really saw that number coming in below expectations, a possible demand positive event that put a bid in the market, end quote. Mizuho analyst Robert Yager said, the focus will now shift to how the U.S. Federal Reserve responds to the CPI report. Yager added, a pause in interest rate hikes could push prices higher. Boy, because we need gas to go back up because, energy prices really are, in my mind, are one of the big drivers of all these higher costs we've had the last 2 years. And I mean, granted, it all starts with the Federal Reserve printing $5 to $6 trillion and inflating the monetary supply. But, energy affects everything. And until we get energy prices back to some state of normalcy, we're really not going to see a lot of relief everywhere else. All righty. Quote, this is just a dollar-based broad rally, end quote, said Eli Tisfay, senior market strategist at RJO Futures. Given the sustained drop in the market, any positive news will lift oil, but remains to be seen if these rallies will hold, end quote. Tuesday's rally could also be due to traders closing out short positions, speculative bets that the price of commodity will decline after both benchmarks fell more than 10% last week. Quote, after being on the receiving end of an absolute drubbing last week, some buying interest and bargain hunting is coming back into the crude complex, end quote, said Matt Smith, lead oil analyst at Kepler. All right, so that's all the news there. Got one last article, comes from our friend Dr. Ron Paul in Lake Jackson, Texas. This is titled The Mother of All Economic Crises. Let's go ahead and see what Dr. Paul has to say. He's always got some good insights into the economy. Nouriel Roubini, a former advisor to the International Monetary Fund and member of President Clinton's Council of Economic Advisors, was one of the few, quote, mainstream economists to predict the collapse of the housing bubble. Now, Roubini is warning that the staggering amounts of debt held by individuals, businesses, and the government will soon lead to the, quote, mother of all economic crises, end quote. Roubini properly blames the creation of a debt-based economy on the near or at zero interest rate and quantitative easing policies pursued by the Federal Reserve and other central banks. The inevitable result of this zero interest and quantitative easing policies is price inflation wreaking havoc on the American people. The Fed has been trying to eliminate price inflation with a series of interest rate increases. So far, these rate increases have not significantly reduced the price of inflation. This is because the rates remain at historic lows. Yet the rate increases have had a negative economic effects, including a decline in the demand for new homes. Increasing interest rates make it possible for many middle and working class Americans to afford a monthly payment for even a relatively inexpensive home. The main reason the Fed cannot raise rates anywhere near what they would be in a free market is the effect it would have on the federal government's ability to manage its debt. According to the CBO, or Congressional Budget Office, interest on the national debt is already on track to consume 40% of the federal budget by 2052 and will surpass defense spending by 2029. I personally don't think the Republic is going to make it to the end of the decade. I think the United States will be a thing of the past by then. I think we'll be dealing with just the states, which will be a good thing because the federal government is just a parasite which leeches off the American people. Diving back in, a small interest rate increase can raise yearly federal debt interest rate payments by billions of dollars, increasing the amount of federal budget devoted solely to servicing the debt. The federal government's fiscal picture is made worse by the fact that the Social Security, quote, trust fund, end quote, will begin to run deficits by 2035, while the Medicare trust fund will run deficits by 2028. The looming bankruptcy of the two major entitlement programs, combined with the unwillingness of most in Congress to reduce either welfare or warfare spending, puts the Fed in a bind. If it raises rates to levels needed to really combat price inflation, the increase in interest payments will impose hardships on individuals and businesses, as well as raise federal interest payments to unsustainable levels. This will cause a major economic crisis, including a government default on its debt, causing a rejection of the dollar's world reserve currency status. Also, if the Fed continues to facilitate federal deficits by monetizing the debt, the result will be an economic crisis. A crisis caused by a collapse of the dollar's value and rejection of the dollar's world reserve status. The crisis will lead to social unrest and violence, as well as increased popularity of authoritarian movements on both the left and the right. This will lead to government crackdowns on civil liberties and increased government control of our economy. The only bright spot is this crisis will also fuel interest in the idea of liberty and could even help bring about the return of limited constitutional government, free markets, individual liberty, and foreign policy of peaceful trade with all. Those of us who know the truth have two responsibilities. First is to make the necessary plans to ensure our families can survive the forthcoming turmoil. The second is to do all we can to introduce as many people to the possibilities, to the ideas of liberty. And that's what I try to do here today. Try to bring people some, paint the real picture as bluntly as I can, and also try to point people in the right direction as far as, paying off your debt, invest sensibly, make good financial decisions, and, take care of your garden at home. It's kind of like Dr. Jordan Peterson says, you got to clean your room first before you start worrying about everyone else. And, there's a lot of people out there who want to tell everyone else what to do, and their room's a mess. Anyways. All right. Well, if anyone needs anything or if that's everything I had for today, if anyone needs anything from me, please go to dsafinancialgroup.com. If you want to get your finances back on track, do some financial planning, plan for the oncoming whatever's in front of us, go there. You can book a meeting, read through everything, all the areas I help people in, and, or just shoot me an email. It's right here on the screen. So, all right. Well, I hope everyone has a fantastical evening. I hope the sun comes out eventually. Probably not today, but tomorrow, once the sun comes out, it'll be quite delightful outside. I don't mind the 20 and 30 degree weather as long as the sun's out, because when the sun's not out, it is damn cold. So anyways, hope everyone has a great night, and I'll talk to you next time. Bye-bye.